Hey, what's up you guys? This is Junior Trader, and in this video we are taking a look at ARM, Broadcom and Micron. All three of your favorite stocks, guys. So let's do the price action analysis on these things. Let's identify going into next week what are the possible trades that could be taken, what are the important levels to watch, and all of that. So with that, hit the like, subscribe. Also, please note, none of this is any financial advice and it's only for education purposes, just sharing my opinion here. Please go and do whatever you want to do. All right. So I did a video on NVIDIA, AMD, and SMCI already. They're on my channel. For other semiconductors, you can, feel free to check those out there. So let's start off with ARM. Now, ARM gave us a play after that rebound, that this blue box that I was talking about, that once price comes down here, as long as we stay above it, that's just a pullback zone or a reload zone with the stop loss on the other side, and things may continue higher. So ARM did that. Now we are seeing one red candle. Is this becoming a lower high? That's the question, right? So let's start off with the overall structure. Overall structure on ARM, guys, is still bullish. As long as we are above this blue box from where the price is, overall structure on ARM is still bullish. But can this red candle on lower time frames, is it looking like it's going to give us some more cool off down to 20 days moving average? Is that a possibility? Now, this is where things get a little bit, once we start to go into this type of distribution phase, right? This is where you can trade both sides, but you have to be very particular with where you're building your position, where you are playing. That's where the levels are very important. So if we continue to lose 163 and 97 cents, there may be some cool off that is expected. I'll show you on lower time frame in just a second what are the things to watch for that, but that cool off may come to 20 days moving average. That's a possibility. Now let's go to the hourly interval. Let's talk about what are some, confirmations that you have to see for that. And that's why multiple level things are important to identify. Let me actually adjust something real quick on my indicator, guys, here. And here you go. All right. Now, so what am I seeing here is that there is this 200 hours moving average coming in from underneath. So well, here's the thing. If it stays below 163 and 96 cents, I'm a little bit only comfortable with this cool off until 200 hours moving average. All right, wherever that would be. And I expect this thing may give us some push back up, some upside again. But you have to see at this closer to 200 hours moving average where double bottoms are forming, where the patterns are forming, where the price actions are forming, right? And that what would lead possibly it to continue higher. So there's still a lot of potentially upside that can be traded, at least on intraday. In the distribution phase, I only suggest trade intradays. And if we eventually also lose 200 hours moving average, then you can expect some more cool off that can come down to that 20 days moving average. But you get my point, right? Structure on ARM is still bullish and can continue to stay bullish for a couple of more days into those pullbacks if they come. And then you have to see the price action on lower time frame, as I said, if you're holding double bottom consolidation at those important areas. And then intraday, right, upside can be traded, in my opinion. Structure on this overall is still bullish. Pullbacks can result into a buy still on this thing. All right, Broadcom. All right, so Broadcom, junior trader, there's that green candle coming up. Is this the time to buy this thing? Well, so let's take a look at that. So this is what we really want to see, that a consolidation starts to happen. If you want to trade a reversal, in this case, after this sell-off, if you want to trade back to the upside. So definitely this is what you want to see at an important significant level with underneath of very close to 20 days moving average. We have a green candle, but that's selling off. If this green candle would have closed above 16-17 area, then sure, there was much more strength. But things, again, it's not out of possibilities still. So let's go to the hourly interval. So previously this was the downside play as we were in that downward trend line, right? and then we got out of it, but I suggested that still stay away from it as long as we are still below 1617, right? And then you can see we are still getting rejected at that underneath of 200 hours moving average. However, things are not looking that bad right now, guys. So what I mean by that, you can see a little bit of some higher pivots have started to hold a support on this. If Broadcom breaks above 1618 or 1617, whatever that level, not going to be penny to penny perfect. If we get above this, it can still give you some intraday upside at least. All right, but that would be, I would say, at this point above 1618. Be careful at this supply zone. Take some partial profits out, because to change the momentum, you definitely need that strength. But seems like it wants to hold at least where the price action is right now. So upside above 1617 intraday at least can be traded now. However, if anytime, guys, we lose 20 and 50 hours moving average, stay away from it from the upside. And at this point, I would not suggest going to play downside as well. The downside play was right over here as when I was talking about it. Right now, it's not the time to play the downside because 20 days moving average is sitting just right there. So yeah, downside play is done. Now it's the time. If upside has to come, I gave you the levels to watch for that and what to look for on the lower time frame. All right, Micron. So Micron post earnings, it got sold off, and I mentioned that any rebound that may come on this is just a short. We got those rebounds, it got shorted, we got those rebounds, it got either sold off or shorted, whatever you want to say, right? And we have a lower high as well ongoing on this thing with a lower low pivot as well, right? Now what from here? This is the level, next level you are watching, as I have been saying, 130 and 37 cents area. If we lose this, at this point I would suggest let it lose 50 as well, 50 days moving average, because it's just very close here. But yes, this is the level, 130 and 30 cents or so. If we continue to lose it, things may continue lower. All right, so that's that. Is there a possibility for upside? There is possibility of both sides. Let's take a look at hourly interval. What would bring that possibility for upside? So upside, I would say, only can come on this if from where Micron is, if it can get above 134 and 14 cents. If it does that, some upside may come, but then you are watching 138 and 52 cents like before, and resistance, because this is where I suggested when after post market we sold off, I suggested that any pullback, if it comes until then, is just a short, and you can see it rejected underneath there, and that was a short, and we continued lower, right? So that's Micron. All right, guys, that's it for this video. If you found it helpful, valuable, please hit the like, subscribe. If you need access to my tools, what you see on the videos, links to my tools are in the description below, and I'll see you in my next videos. Bye. One more thing, sorry. If you also want to follow along with me on my dividend investing journey, the public facing portfolio that I'm building, check this channel out. You can find the link to it in the description below. Just go and search Junior Trader Dividend Investing. Here I post the videos. Subscribe here and like if you're interested, guys. And yeah, with that, I'll see you in my next videos. Bye.